Jai Hind students, today we are going to discuss macroeconomics, Unit 2, Money and Banking, Part 4 video. Functions of commercial banks, as you had studied earlier, the primary functions are accepting deposits, advancing loans, and the secondary functions are overdraft facilities and discounting bills of exchange, investment of funds, agency functions, and miscellaneous functions. These have been studied by you during the last classes, and now we are going to discuss about the new one of the new concept that is very important to you, that is known as what money creation of commercial banks. For this, you have to understand an important function, that is important concept, that is legal reserve ratio. The proportion of a total deposits commercial banks must keep as a reserve by law is called as legal reserve ratio. So what is that? It's a proportion of total deposits commercial banks must keep as reserve by law is known as what? Legal reserve ratio. So why it is kept as a reserve? It is due to some emergency situation may arise. So the bank has to contribute, or the bank has to give the needy persons the funds, or the public when they come and ask for a bulk of amount withdrawal, so they have to return the money back. So the legal reserve ratio has been kept with the commercial banks. So money creation process have been done by a certain calculation methods, so that we are going to see here. So money creation of commercial banks starts with the initial deposits. So as we are assuming certain values for calculation, so here initial deposit is ₹1000 and LRR is 20% of this 1000 has been kept aside with the commercial banks. So let's see how the calculation goes. So here 1000 into 20% is equal to 200. So 200 has been kept with the commercial banks and 800 has been circulated among the public. So let's see in the tabular representation. So it's around first round 1000 deposit has been given. Then LRR, as I had told earlier, 20% of the initial deposit, that's 200. Then minus 1000, it's 800. So that's given to the public as a loan. So let us also assume the entire commercial bank system is a single unit and all the transactions in the economy are routed through banks. So here see the same second round is done. So second round you can see here we are putting as 800. The loan has been again deposited into the bank, for example. Then the person we are giving 800 as loan, he is depositing the amount in commercial banks. So it's a deposit of the public. Then the 20% is 160 of 800 into 20 divided by 100 is 160. Then subtracting both, you will be getting loan as 640. Then as a third round we can just continue the process. So 640 is deposited in the bank. Then we have to find the LRR, that is liquidity ratio, that will be 640 into 20%. So we will be getting 128. Then subtracting both, we will be getting 512. So this processes goes on, and we can find the money multiplier, how much the money multiplier use with the use of a formula, that's 1 by LRR. So it's very much time consuming. So we are just introducing a formula and finding how many times the money multiplies. So here 1 by 20%, 1 by LRR is 1 by 20%, as you know LRR is 20%. Then you will be getting 100 divided by 20, then it's a 5 is the answer. So money multiplies 5 times, you know. Then 1000 into 5, the initial deposit has been 1000 and 1000 into 5 times the money multiplies. So deposit will be multiplied 5 times, that is 5000. Then the LRR, liquidity ratio, also been multiplied into 5 times, that is it will become 1000. Then the loan capacity that the bank can be given, so it also multiplies to 4000. So this is the money multiplication process. So the process of credit creation goes on continuously until derivative deposit becomes 0. So we can say that the in deposit column, when it becomes 0, it goes on continuing. So you should not just mention the this derivation further. You can just mention till third round. So further derivation is not required. So as it is time consuming to find till 0, it becoming 0. So you can just find till the round 3. Okay. So in the end volume of the total credit created in this way becomes multiples of initial deposit. So it becomes the multiples of initial deposits. As you know, it becomes 5 times, then it becomes 5000 here. And if the bank succeeds in creating total credit of say further, it means bank has created the 5 times of the primary deposit of 1000. So it's meant for 5000, and 5 times is nothing but the value of money multiplier. So in short, we can say that money creation by commercial banks depends on 2 factors. First factor is amount of initial deposit and the LRR. So first initial deposit, how much it is there, and the percentage of LRR, it depends upon the money creation or the credit creation of a commercial bank. So it's an important concept. It may be asked for the exam. So study it. So another important concept that is we are going to study is central bank. So it is an apex body that controls, operates, regulates and directs the entire banking and monetary structure of a country. So it's the apex body that controls, operates and regulates and directs the entire banking and monetary structure of a country. So it's a very important bank. So in India, which is our central bank? Our central bank is RBI, as you know. So just see a chart that is shown here. That's general public, and it need money from the commercial bank, and then commercial banks takes funds from whom? Central bank. So financial institution, it's a very important apex body, that large banking channel, and it's an important financial institution which control, operate and regulate and directs the other financial institution or monetary structure of a country. Entire banking system is known as central bank, and it's in India it's known as Reserve Bank of India or RBI. Then it occupies the topmost position in the monetary and banking system of a country. Then RBI was established in 1st April 1935 as per the under RBI Act, that is 1934. So only this year is important and date is important. So other things, that is if anyone asks you, you can just mention that RBI Act 1934 has been initiated for the starting of this RBI. So next we are going to see the functions of central bank. So as central bank of the country, has certain functions. The RBI of India performs the following functions. So first is currency authority. So it is a printing authority or currency authority, and bankers to the government and banker to the bank, and acts as a supervisor, then controller of money and credit, then custodian of foreign exchange reserves. So these are the main important functions of central bank. So first function, currency authority or printing. So central bank has the sole authority for issue of currency in the country. So in India, RBI has the sole right of issuing paper currency notes except 1 rupee notes and coins, which is issued by the Ministry of Finance. So advantages of sole authority of note issue with the RBI. So it leads to uniformity in note circulation. It ensures public faith in currency system. It helps in stabilization of internal and external value of currency. Then power to influence money supply. Then supervision and control over the central bank with respect to issue of notes. So it while we are giving an authority power to the central bank, it may be having what in certain advantages. So that advantages have been explained here. It has uniformity, then public faith, then people always have a security with this RBI, then stabilizes internal and external value of currency, then supervises other banks, and it acts as a respect of issue of notes. So second function is bankers to the government. So the RBI acts as a banker, agent and financial advisor to the central government and all the state governments except Jammu and Kashmir. So Jammu and Kashmir is not under our control, so it's just stated like that, you don't have to write and all. So the RBI acts as a banker, agent and a financial advisor to the central government and all state governments. So it's an financial advisor. So it maintains current accounts for keeping their cash, and it accepts receipts and make payment for the government, and it also gives loans and advances to the government for this temporary periods. So RBI acts as a measure of that's current account for keeping their cash, and it accepts receipts and make payment for the government, and it also gives loans and advances to the government and for temporary periods also. So as an agent is the next we are going to see. So as an agent, the central bank also has the responsibility of managing the public debt. So the management of public debt is also in the hands of RBI. Then as a financial advisor, the central bank advises the government from time to time. Economic and financial monetary matters has been advised by this central bank. So next important function is bankers, bank and supervisor. So there are number of commercial banks in a country, So there should be some agency or to regulate and supervise their proper functioning. So that has been done by the central bank. So as the banker to banker, the central bank functions in 3 phases. So first is custodian of cash reserves, second is lender of last resort, third is clearing house. So we will be seeing the explanation now. Custodian of cash reserve. Commercial banks are required to keep a certain proportion of their deposits, that is known as CRR, cash reserve ratio, with the central bank. So in this way, central bank acts as a custodian of cash reserve of commercial banks. So as you know that commercial banks also have to keep a proportion of money that the public gives to the commercial banks as what LRR. So like that, this commercial banks have to hand over certain currencies to the central bank as known as what CRR, cash reserve ratio. So that's the duty of the commercial banks. So that is one of the function, that is custodian of cash reserves. So which are cash reserves that have been kept with the commercial banks, a proportion has to be given to the central bank. So next is lender of last resort. So when commercial bank failed to meet their financial requirement from other sources, they approached the sender bank to give loans and advances as a lender of last resort. So when commercial bank failed to meet their financial requirements from other sources or from abroad or from any other financial institutions, the commercial banks approaches the sender banks to avail loans and advances. So it's known as what, a lender of the last resort. So next function is clearing house. So as sender bank holds the cash reserves of all the commercial banks, it becomes easier and more convenient for it to act as their clearing house. So all commercial banks have their accounts with the sender banks. So therefore the sender bank can easily settle claims of various commercial banks against each other by making the credit and debit entries. So that has been done by the sender banks. So sender bank look after all the matters of the commercial banks. So it is known as what, clearing house. So thank you students for today. Thank you.